Hello traders, and welcome back to a brand new video by Vertex Investing. So today I'm going to go through something that will add a little bit more confluence to the free strategy that we taught here on YouTube. And before I go any further, make sure you subscribe to our channel just so you don't miss any of the free content that we're sharing here. And also, again, thank you very much to everyone who has supported us over the last few weeks that we've been active on YouTube. To be fair, we should have done it earlier, but you know, it's alright, the time has come. And obviously, Happy New Year. Also, our giveaway is being announced later today at 6 p.m. GMT. So if you want to know more about that, go to our Instagram at Vertex Investing and find what you need to do to enter. If you've entered already, I wish you good luck, and we'll see what happens. So in this video, what we're going to talk about is something called momentum. Now, momentum will give you a little bit more confidence and confluence behind your trades. And how to understand it is very simple. All it is simply counting the candles, right? That's literally all it is. So if where was I gonna go from? Let's go to current price. So this is a weekly time frame, right? And I did add a border around my candles because someone mentioned it's quite hard to see, and I didn't realize. So I hope this makes it a little bit more easier for you guys. So let's look at current market price. Now, in terms of momentum, now this isn't going to give you 100% accuracy in terms of 100% confluence behind your trades, because it's not the confirmation entry that we use at Vertex itself. But for the free strategy, it's just something to keep in the back of your mind, and hopefully it'll give you it'll improve your strike rate, because I know the strike rate with the free strategy may not be the best at times, because you could face a number of problems in terms of finding several OBs and you don't know which one to go for. But for the free strategy, there isn't a lot that you can change, unless obviously you do your further research on top of what you've been taught here, and then you could probably work out what to do from there, or find your own interpretation on how to confirm your trade and how to confirm the OB. But essentially what I'm going to talk about is also understanding where you are in the market now. So this is the weekly time frame. Now remember, you have to go to, so it's a multi-time frame analysis. So you need to understand where you are in the market and what the bias is on the higher time frames before you go straight to the lower time frames. Now you can do well on the lower time frames, for example, trading the 15-minute trend. But for example, if you're in a move, right, and you're going pro trend only, and say for example the bullish move, say you had let me do a visual representation. So say you had a bullish move like this, and the OB is sitting here, okay, and then price is obviously going to retrace and then continue, right? But say for example this move is like 100 to 200 pips, okay. Now, although you are pro trend, and say you're in a trade from down here, you're in a buy already, okay, so you're holding a swing, so you're already in this trade, and you've got another point of interest sitting here. Now, if it's retracing 200 pips, okay, bear in mind you're still in this trade, so you're going into you're losing a little bit of your that trade, but obviously you're not closing it out, but you're losing a little bit, and before it carries on. Now sometimes it's not nice to sit through, say for example your trade that's sitting at 20%, and then you see a drop of 10% before it continues. You know, it's for some people the emotion, it can trigger your emotions and make you do some stupid things really. But the fact is you need to stay calm, okay. But if this drop from here to here, so this point, okay, if that is 200 pips, for example, are we just going to sit and do nothing about that? No, because the fact is you can trade counter trend if the entry criteria is there, and the entry criteria is exactly the same as you'll find in your as a free strategy. essentially you need to find a breaker structure and an OB. That's literally all it is. But you need to confirm that the trend is changing, and that is what I'll teach you today as well. But as well as confirming, you need to have more confluence as well behind it. So I found a quicker way to actually get rid of my brushes as well. There you go. There's another way. Someone said if you hold control and then highlight them, then you can do it. Oh gosh, and you can get rid of all of them. But I'll try that actually. I haven't tried that yet. But if we look at what is happening at the market at the moment, so let's just start from here. Okay, so I'm only going to focus on this part here. Okay, we know that obviously it's very bearish. Okay, we can see it's breaking several bearish structures, and price is just reacting to some sort of OB here, and it's come down and broke structure again. Now what can we see here? We can see a very clear OB. Now if you get an OB on the higher time frame, and this is the weekly, this will be classed as your swing point. So what I mean by this, if you get a trade in this area, you'll be looking for swings. And what I mean by swings, you'll be looking to hold a trade from, for example, from a sell from here to all the way down here. But this move, for example, this let me just do a line for you. So that move from here. Now I don't know how clear you can see that. I'll try and make it. I'll change the density. Yeah, okay, you most likely will be able to see that. And from here, okay, I'll do the same thing again so you guys can see it. Okay, so this range is, gosh, it's 2,097 pips. Okay, that's a huge range, right? And what are we going to do? Are we going to expect to just wait for price to retrace 2,000 pips just to come here before we look for a sell? No. Okay, because we want to look for a change in trend so that we can actually go against the trend and trade towards our entry. Okay, let me mark this out as well so we know where it is. I'll just use this one, and I'll keep a thin one. I'm sure you can see that. There we go. I've also changed the resolution so it should be clearer. It's because my monitor's quite big, so I didn't realize that when I compress it, it looks a bit funny. But hopefully this looks clearer for you guys. So there you go. Okay, so that's going to be where we're going to be looking for our point of interest. I'm not going to refine that just yet, and I'm not going to go into taking this trade because you guys should already know how to do that from the previous breakdowns and so on. But we're going to talk about momentum now. What you're going to do for momentum now, essentially, you need to have 2 points. So say that is point B. Oh gosh, that doesn't look like a B, does it? There you go. So say this is point B, point C, and then point A. I don't know why I did it in that order. Okay, so say going from point A, okay, and then this is point C. Now what can you see? Okay, so going from point A to point B, say that takes, I don't know, 10 days. Okay, but going from point B, okay, it's probably not going to be that clear, but say going from point B to C takes 5 days. Now this is momentum. Momentum's to the downside because all it's done, it's taken longer to go up, but quicker to come down. And this is when I'm talking about the laws that come with wick-off in the previous videos. I can't remember which one it was. It says wick-off on there. And this is one of the laws when you're thinking about cause and effect. And I would suggest going into that just to make sure you understand what that is. But essentially, you're going to be looking at momentum. Now, it does include volume, which I'm not going to explain as well in this video. I don't really use volume, to be fair, as much, which I know can be slightly controversial, but it doesn't help with my rule-based method as such. And I'll explain in another video why I use a rule-based method and why, I'll just basically explain why I've adopted it. Now, for momentum, if, for example, it takes 5 days to reach here, you know that momentum is bearish. Also, you want to count the candles. So say this takes, I don't know, let's say it takes 100 candles to go up, but it takes 50 candles to go down. Momentum is bearish. Okay, so say, for example, if you've got, I don't know, an OB here, okay, and you don't know if price is bearish or not because price was fairly bullish, price is fairly bullish beforehand. That's very bad representation, by the way. But price is very bullish, okay, and we're also broken structure, but we're also broken structure to the downside. So we're sort of questioning if price is going to reverse or not. And to be honest, the market is obviously very unpredictable, and we don't actually know. Although order blocks are financial footprints, you know, we're not claiming to trade like the banks, and we don't know what price is going to do, and we can't control price as a retail trader. We need to understand that we are still retail traders. We aren't institutional traders by any means, okay, and we never claim that we are. We need to understand, from our understanding, what the banks are leaving behind for us, okay. Basically, we're getting the scraps, okay, but this is what we can see. We can use momentum to have a better idea of what is going on. So let me get rid of all my drawings again. I should have used a control tool. Okay, I'll use it the next one. But let me get rid of the brush. Right, so let me get rid of this. So what can we see here? So remember, another thing is that price is, I'll explain momentum in another clear example as well. But remember, one thing is that price is fractal. So whatever happens on the lower time frames will repeat itself on the higher time frames. Okay, so how can we trade back up? Okay, that's what we're going to be thinking about, because we're not going to be looking for a sell around here. Why? Because this is a very clear OB, and that's where the highest probability is, and that's what I want you guys to focus on, the highest probability zones, and those higher probability zones are from your higher time frame. Okay, so what can we see is obviously we're broken structure, and we're going to be looking for buys. I'm not going to look left to see, I hate the term looking left, but I'm not going to look left to see where it's reacted to, because all I want to see is a change in trend. And the lowest I could go to is the 15-minute on this time frame at the moment. And let's just go to where the lowest point was. So the lowest point was here. Okay. Right. Okay. So get a change in trend. So what happens is you get like a period of consolidation, right? And in this area, what you would get is suddenly you'll get a break of structure, a retrace, and another break of structure. This confirms that this is a change in trend. So this is confirming that, obviously we've come from up here, this is confirming that price is going bullish. This can be seen as an accumulation schematic. Again, a wick-off term, and if you don't know what that means, I suggest going to the wick-off video just to understand it and to learn a little bit more about wick-off. But as I said, I don't necessarily focus on wick-off because, again, it doesn't really fit the rule-based criteria, but it's been factored in to our entry system, which probably makes it sound a little bit more confusing than it is, but it's very simple. But what can we see? Okay, so we've broken structure. Okay, now we know that this is the point where the structure was broken from. Okay, so below here is the invalidation point. So if price comes here, then obviously we are wrong. Okay, we're not expecting that price to continue up, but it's most likely that this is a change in trend. Okay, and that's what we're going to focus on. So if we're looking at current price at the moment, what can we see? So we obviously created this sort of low that was here, then we create a high, then a low was created here, then we create a high, and then a new low. Okay, so far there's nothing. This is a lower high, sorry, for this, and then we just create a new low from here. That's only if you think that a wick break structure is a breaker structure. So how you think of how you see a break structure is completely personal to you. It's up to you how you want to see it. Some people use a body break. It's but that's down to you. But let's let price run and let's see what happens. So the structure we need to break is this structure here. Oh, that's a very straight line that I drew. Okay, fair play to me. Oh gosh. Okay, so we've broken structure. Okay, for me, we have broken structure. Now, where did this structure of break come from? It came from this OB here. And then this OB is obviously very small, very clean, and we can set an order here. So let's set an order here. Now, it looks like it actually missed. Now, as I said, I don't really pre-plan the videos, to be fair, so I don't really know, which is good to be fair, because you can see my live reactions. But yeah, so I won't refine it any further than that because it won't let me go any lower. So obviously I think our stop loss could be a lot tighter. 9 pips is huge for me. Well, for me that's too big. But let's go. Okay, so we didn't. Price is just gone. So that's fair enough. So we missed this trade. I'm gonna just tighten it just so we don't see it, but and our target would have been obviously up there. Actually, I'll leave it where it is. But what's happened is, if we think about what's happening now, remember what I said, when we get this and we get a retrace and a break of structure, we can have another break structure and get another entry here, right? Because we should get a retrace and go. If it breaks below, this is invalidation, so we shouldn't worry about that. So we shouldn't expect price to go below a low, if that makes sense. So let's see what's happening at the moment. So the structure break that we need to look for now. So we create this low, and now we create this high. So we want to see a break of this structural high, right? That's what we want to see. Okay, so oh god, I've gone too quick. Sorry. Bear with me. Sorry, there we go. So now that we've broken structure, and the structure break, if you can't see it, is from here. That's not what I wanted. I wanted this one. So the structure break is from here. Okay, so that broke structure. So now remember again, and I'm going to keep drawing this so you guys can, so I can drill it into your heads, is that this is what we're looking for. So we didn't get the first entry. We didn't get this first entry from this first break, okay, because it missed, and that first entry was here. It missed by probably a considerable amount. Let's see. It missed by 7 pips. So yeah, that's quite a big miss. I don't even know what it reacted to, you know. It must be something on a different time frame. Obviously, as I said, I can't go any lower, but there must be something there. But you never know. And again, I'm not claiming to take any of these trades, because I haven't. I can't remember if I did. I don't remember having a long swing on GJ anyway. So yeah, I'm not claiming that I've done it. And this is probably like, it's similar to a backtesting session. We'll say that. So. That's essentially what's happening here. Anyway, so we didn't get this first entry, but we broke structure again, and our entry point is now here. Okay, and that's essentially what we're looking for. So now that we've broken structure, we need to find what caused this structure break. Now, what can we see here? So we've had a structure break, and where did that break come from? So the break come from the most extreme point, so it's here, right? So that's already been mitigated. Can we go to a lower time frame? Okay, yes, we can. Right, so if we go, so 10 minutes, I think is all I can go. 5, what was it, March? Yeah, 5 minutes, it won't let me go there. So if we think about where the structure break actually came from, where it originated from this OB sitting below here. Let me get rid of my drawings again. Oh, wait, let me do the other route. So it was control. And okay, so we've broken structure, and we found that this is the OB that created that move. That is the generator for this move. Okay, now the reason I'm not saying is this one is because this is part of a continuation. It's part of a It's part of a continuation. So this move is not part of a pullback, and then not part of a pullback or retracement to cause that move. Okay, it's just a continuation to the upside. So we've broken structure here. Again, if you want to put some of your risk here, you can to place a trade. But to be honest, I would look for the extremes. And if you go to the 10 minutes, so remember I mentioned that we want a clear OB and we want gaps. Okay. Now, although that this OB sort of seems like it's been mitigated, but this gap indicates to me that there's been something on the lower time frame to confirm it. And also this wick also confirms that there is an OB here. Okay, so I'm not going to explain again why the wick is so significant, because I haven't seen it anywhere, but I do feel it's unique to us. I haven't seen it said anywhere, but essentially if you go to a lower time frame, you'll see why. I'm sure you can make out, but this market gap essentially confirms that this is where the institutions are causing an impulse, right? Because as retail traders, we can't create this massive impulsive move. Okay, we just can't. We don't control the market that way. Our moves are so insignificant, right? So you need to bear that in mind. So when there is a massive impulse, okay, it just shows that this is a footprint of what was left behind. But for this case, because I can't go lower and refine it, because I'm sure there would have been something, I'm just going to use the 50% of this 15-minute OB. Okay, if I choose the fib tool, it would work. There we go. And I'm going to place an order. So let's place the order from the 50%, which is there, and our stop loss is going to be just below, so it's about 30, I put that, there we go. So our stop loss is about 14 pips. Now in terms of TP, as I said, I was going to draw this all the way up, but we missed it anyway. Our TP for the actual swing point is going to be to where we want to sell from. So that's where you want to hold it up to, and this will give you, if you held a full position, it'll give you 120 R, okay, from this one trade. Now obviously we know that price got there because we saw it before I marked it, but the point is, this is how you're trying to identify when there's a shift in market structure. Now if you think about it momentum wise as well, we can see that there's more bullish momentum than bearish at this point. So that gives us more confluence behind our trade. So we just placed the order, and let's see what happens. So as I said, so price triggered perfectly, but to be fair, that's too much drawdown for my liking. But obviously it didn't last very long because it was just in that one candle, but I do feel there is something in there on a lower time frame that we could have got on. So I'm sorry that I can't actually refine it that much further, but we're in this trade at the moment. And all we need to do is simply just hold. Now remember when I made the video saying that you should pay yourself. Now that we broke your structure here, okay, so how much did that move? 104. So that's about 8R at this point. So you can either close half of your trade, so you can close 4% and leave 0.5% risk running. And then if you do leave 0.5% risk, your target, if hit, it would be around 60R. Okay, now why are we so confident that price is going to reach there? Because that is where we want to sell from. So price still needs to come from there. And if we go in the weekly again, okay, look at this. So this is a very impulsive move. Okay, retail traders did not cause that. This was caused by the institutions. Okay, so we know that this is a footprint, and at minimum the point that where price has to go to at a minimum would be to here before having some sort of reaction, because obviously price can just fly through and continue going, and that could be a shift of structure on the weekly, but it's not going to confirm that, right? But that's going to be our minimal point that we're going to be looking for. Okay, let's go back to the 15-minute. So as I said, price is fractal, right? So whatever's happening on the 15-minute is going to replicate on the higher time frames and so on. Okay, but let's just extend this and let's play this out. So as you can see, price is just gone, it's going, and we've obviously got our entry. Now if you don't get your entry on the first and second, don't bother looking anymore, because you don't want to chase it. Okay, and that's when you're chasing it, that's when you're going to start making mistakes. So if you go over to the 1 hour and see what you can find. So if on the lower time frame you missed that, go to a higher time frame and find the exact same situation: consolidation, break, retrace. Let's have another break structure. So we know that price should come to somewhere around this level. But obviously we're in this trade anyway, so we don't need to worry about that. But let's see if it does come anywhere near. Okay, it comes somewhat close. Okay, didn't really tap it, but I don't know if there would be any confirmation around that area or not, but it's just showing you that, it's confirmation. But now that we broke structure again, price came back, retraced. I think we would have been stopped out. Yeah, so if you've missed this first entry, which we would have had because it didn't even reach our entry point, but when we break structure again, the break structure originate from this candle here, and yeah, we would have been stopped out. But there is a significant wick here, but again, I'm not going to explain that, but I probably wouldn't have used that anyway. I would have used this and took the loss anyway. But if our confirmation entry wasn't there, then I wouldn't have entered anyway. So that's the difference between the free strategy and the Vertex method. But anyway, let's let this trade play on and see what happens. Let's just go on the 4 hour. Exactly the same thing. So remember, if you miss something on the 1 hour on a lower time frame, then you miss on the 1 hour, then you miss it. If you miss it on the 1 hour, you can go to the higher time frame, so the 4 hour. So we've broken structure. Now we want to see a retrace and a break structure again. So the retrace hasn't happened as of yet, from what I can see. is just creating the highs. Okay, it's sort of coming down now because there's still a clear gap here and an OB. So where the price comes here, you know what, I'm just going to play it out because we've already seen what price actually does. Yeah, so price came back and ended up retracing to what level did it come to? Again, I don't know what it reacted off, to be honest. This is the point that I was pointing at, so I don't know what it reacted off anyway. But as you can see, the premise is there where you're looking for that breaker structure. You just have to be patient and wait for price to come back to your area. If it doesn't, it doesn't. It doesn't really matter. Okay, and you know, taking less trades, it does improve your strike rate and does improve your consistency if you follow a set rule. Okay, and that's essentially why we have a rule-based method. We may miss a fair few trades, but the consistency is there. So that hit TP. So again, if you closed half your trade at that first breaker structure, you would have hit 60R in the space of what's that, 166 days. So to be fair, that's a very big swing. The charges will add up, so whether you hold that for not for all that, I don't know, or just take partials along the way, because you remember the key is you want to pay yourself. You know, the market doesn't owe you anything, so whenever you get a breaker structure, just keep you can take more partials and leave a very small percentage until you feel that the charges are taking over. If that's the case, then obviously just close the trade. So I don't know, because with these swings can be huge, especially with these size stop losses, your lot sizes will be a lot bigger, so the charges will be a lot more. So having these swings may not be ideal, but you can still close a nice percentage from having a small percentage running. But anyway, let's go into momentum again, because there's a good example here. Now again, I didn't take this trade, but it's very similar to the GBP USD trade that I sent the trade idea of into the free Telegram group. So make sure you've joined that as well, because we do sometimes share, we share content in there. So yeah, keep a lookout. So what can we see here? So in terms of, we're just going to focus on this area here. So let's just go back and focus on this. So remember, so this is going counter trend of the what's actually happening at the moment. But remember, we've already tapped our higher point of interest, but we've just broken structure and we need to go back to the extreme, which is somewhere around here, which price has just tapped. Okay, you can see this OB, so price has just tapped it, that broke this structure, and this is where we're going to be looking for an entry if you're going to look for a swing back. But obviously we've still got this point of interest still here, and to be fair, I didn't refine the weekly OB, but there has to be something within that before a move down. That can't be the move. Well, it can be, but I don't feel it is. I'm not convinced, but I won't go into refining that at the moment. You can do that in your own time, because I know this video is quite long already. So what can we see here is obviously we've got a breaker structure. Now where is momentum sitting? So let's go back to here, because the actual trade idea is there. So we can see that we've just broken several bearish structures. We've broken here, we've broken here, here and here. Okay, we've broken all these structures, right? And momentum, it only took 1, 2, 3, 4, 5 candles, okay, to come down here. And how many candles did it take to do that move up? Let's have a look. So let's go off the brush, and it took, okay, so it took 28 candles to go up, but it only took 5 candles to come down. Okay, so where is momentum? It's bearish, right? So we have a good confluence to take a trade from this OB. So we can see the OB is obviously here. Again, I'm not going to refine it overly. I'm just going to do like a rough trade, because again, I do appreciate this is a long video. So if we just go through, let's go to the hourly. Okay, there's a very nice OB within there, so we can refine to that one. Again, look for the extremes. Let's just go 45 minute, anything, 30 minute. Okay, that's even better, so we can use that. And remember to cover the wick as well, if the wick is surpassing the previous one of your OB. Anyway, let's go back to the 4 hour and let's just set our trade. So you know what, I'll just use the open for the sake of it, just to speed up the process. Anyway, let me play this out a little bit more, find the low. Okay, so we've got this. Our stop loss is going to be here. No, so our stop loss is going to be just above. That's huge. But anyway, I think we could have refined it further. But let's say this is going to be 12R anyway. So let's play it out and let's see what happens. So we trigger perfectly and it comes down. Okay, and it hits TP. Why was TP here? Because we've already established that this is a huge point of interest, and if you have refined the weekly, there's probably something already still there. And we also can consider the fact that there is still some mitigation left that needs to be happening here on a different time frame, but I haven't gone into that into huge detail, which again you can do at your own time with your own back testing time. But if you're going to do these, this is showing you how momentum can give you more confidence about taking a trade. Because say for example, if price is coming really quickly, so say, let's go here, say if price was coming, say if it took I don't know, like 3 candles to go, doesn't look like a 3. Say if it took 3 candles to come up and it's coming towards your entry, I would delete this order because momentum is bearish now. It's bullish, sorry. Okay, but we know that momentum is bearish at the moment, and it's a very slow process. So once you get to 1, 2, 3, 4, 5, look, it's already gone 5 candles. It's nowhere near your entry. You've got more confidence to take this trade and place that order. Okay, so implement that into your trade plan when you're using the free strategy, and just see how it goes, and hopefully it helps you determine which trades you're going to take and which trades you aren't going to take. But again, I appreciate the time that you've taken to watch this video. Again, please like and subscribe, and so you don't miss any of the free content. Also join our free Telegram where we share, well, from next week we're going to be active because I will be trading again, so with the other 2 mentors, Ben and James, and yeah, so it'll be a lot more active. But I hope you've enjoyed this video. I do appreciate it's a very long one, but again, it was very crucial for you guys to know this. But again, take care and a happy new year to everyone.